We're joined by Claudio Piron. He's the head of Asian and Foreign Currency Research at JPMorgan Chase. And as always, he joins us from our Singapore studios. Good to have you with us, Claudio. Now, I know this is probably not your usual coverage, but first off, let's get a house view on the Chilean peso. We have some movement at this point, given that devastating extent of that earthquake. But what is the house view and the outlook so far?
Well, I think as always with these natural disasters, the human cost far outweighs, in a sense, the economic impact to a degree. Our house view at JPMorgan is that the growth for Chile will be reduced something from our 5.5% GDP forecast to 5%. It will have a negative hit short term, but in terms of the medium-term perspective, we will get growth picking up purely because of the reconstruction efforts that will take place subsequent to that. We may see some initial Chilean peso weakening. We still expect the dollar peso to trade in a range of about 515 to 560 this year. So initially weak, but again, I think we will see some recovery in the economic growth as the reconstruction efforts take place. Also keep in mind, because Chile last year had a deficit of about 4.5% of GDP, what we're expecting, obviously, that they'll need some fiscal effort here, but they'll repatriate some money overseas from their sovereign wealth fund, which may, in a perverse way, in a sense, help the peso to appreciate, and maybe the Chilean central bank will make an effort to try and offset that by possible intervention as well.
Yeah, okay, that's an interesting play there in Chile, considering you have the reconstruction efforts possibly being funded by the central bank and maybe a reduction in the deficit. You won't use a lot of deficit spending for that reconstruction, Claudio. Quickly, let's talk about the Thai baht, because we had those weekend events, as I mentioned, grenade attacks on Bangkok Bank, and then, of course, we had the headline with Thaksin Shinawatra losing half his fortune. The baht not reacting that much, maybe strengthening about 1/3 of 1%. Do you expect any big reaction in the currency markets to these, to what's happening over in Thailand?
I mean, to a certain degree, not. Really what the weekend illustrates, and the broader political trend has been, is that this is not a political event or an event crisis as such. It's more of a political saga. And the market is, in a sense, treated it as such. It's part of an ongoing saga and a political tension, which, so long as it does not spill over into, significant political violence, I think the market will continue to treat it as a kind of a sideshow, although obviously it has a long-term impact for the country and for its foreign direct investment appeal. What is key to the currency and what continues to drive the currency fundamentally is really the current account surplus and the depressed state of the domestic demand, although that could be changing as well. We've seen recent Thai growth actually pick up. But overall, it remains a current account surplus story, and that leads it to appreciate at times when you think it should depreciate, such as this weekend. So unfortunately, I think or fortunately enough, I should say, for the currency, it continues to be driven by the economic fundamentals, where the politics is seen as an ongoing show.
Yeah, can I get a forecast, Claudio, on the baht at this point? We're trading at 32 to the US dollar. How do you see it playing out for the rest of the year?
Well, we see it at a gradual appreciation, something towards 31 level towards the end of the year, partly because of the current account perspective of the currency. That has continued to be the story. That's how we continue to view it. We don't really take it as a top pick. We don't have it as one of our top trading recommendations at the moment, partly as well because liquidity is not so great either. So in terms of investors, it doesn't really necessarily have the appeal of being one of the most liquid currencies in Asia, and doesn't have the appeal of having a strong appreciation trend for the year, but generally a mediocre trend.
Okay, well, let's talk about some of your top picks then, Claudio, because you, like other currency analysts, predict that the Indonesian Rupiah will continue to be an outperformer along with the Korean won. Now, with these two currencies, pretty much the consensus, don't you think this is probably an overplay at this point? It's a crowded play?
I think that's a very fair point, and that's the difficulty we've had so far this year with our dollar Korea position, where we were initially stopped out of our 6-month short dollar long Korean won position. We've re-entered the position again in the belief that the current account, the undervaluation of the currency, should favour the appreciation. But part of the reason or the difficulty with that trade has been because of the crowdedness of positions. I think some of those positions clearly have been cleaned out because of the upside pressure we've had on dollar Korea in recent weeks. On dollar IDR, I think we feel more comfortable with the risk and more committed in terms of our position with dollar IDR, partly, of course, because Bank Indonesia continues to intervene in the market and provide some cap at around the 9,400 level. So in that regard, I think of the two trades, IDR, even though it may be crowded, it at least has some support by the central bank, in our view, looking for FX stability and looking for the currency to play some role in its monetary policy. We do not expect, actually, the Bank of Indonesia to raise interest rates this year, and so consequently we think the currency is a key point for their strategy in containing inflation.
Yeah, and Claudio, let me just ask you about cross plays here. What's the best play on the IDR? Is it just a straight US dollar cross?
I would say so. I mean, you could look at things as the carry traders, yen IDR and so forth, that in a sense is appealing. But given the uncertainty that you have in the world and the way that we've had continued downside pressure on dollar yen, I think you have to be a little bit careful. Particularly as well, one of the event risks for the year continues to be the concerns of a fiscal concern, be it Greece, be it the UK, be it ultimately even the United States. And if that really becomes more of a full-blown concern to the market, we could see risk come off in a more significant way. And in that sense, you'd see a lot more downside risk potentially to dollar yen. Not that yen has any less fiscal risk than the rest of the world, but that's the way the markets are at the moment.
Okay, let me just quickly ask you more about the Korean won. We have about 40 seconds here, Claudio. But what about Korea at this point? Some are expecting an interest rate hike this year. Some are also seeing it weaken at this point against the US dollar. What makes it more compelling at the end of this year?
Well, I think you're right. But I would say in terms of the interest rates, we have about 100 basis points or 120 basis points priced into the market, which we think is fair value in terms of Korea strategy. And we've taken profit on our 2-year Korea IRS receiver trades. But again, what is appealing is the upside to recovery play. Korea remains a very leveraged currency for global economic recovery, and that's our house view. So consequently, we use Korea won as the poster child for recovery. If we are going to hedge our bets, what we've recommended this week is to be long dollar Taiwan in the prospect of downside risk.
All right. Claudio, unfortunately, we're out of time, but very interesting poster child you have it for the Korean won. That's Claudio Piron of JPMorgan.